Greetings and good day. I hope you're doing great. I'm here with you. We're here with the daily analysis of gold on February 18th in the daily time frame. As you can see, the price of gold is still fluctuating and reacting to the Fibonacci zone. The price of gold experienced about a 30% increase in 2026, and even after the recent drop, this has happened. Currently, it is trading with more than 14% growth in the current year. In previous analyses, we also mentioned that this recent decline has occurred as a profit-taking and price correction. We consider it as such, and it has not been able to have a negative impact on gold's long-term upward movement. We are currently analyzing the 4-hour time frame, and as we mentioned, we still see gold as profitable in the long term. However, at the moment, there are factors that can keep gold bearish in the short term. Among these factors, we can mention the start of the Chinese New Year holidays, which is approaching. In this period in previous years, we have seen that with the closure of Chinese markets, demand and liquidity in the gold market have decreased. This is because, with its large population, China is one of the biggest gold buyers. Now let's analyze the chart. We can see that in the recent upward movement, gold's price went above its previous high range. That is, it even reached the price of $5,090, and after reacting to this level, it pulled back. Following this reaction to the level, the price filled its previous 4-hour and 1-hour gaps down to $4,880, and at the start of this week, we saw a downward move in the price of gold. Another factor affecting the price of gold is the reduction in geopolitical tensions. We can mention that yesterday was the second round of negotiations between Iran and the United States, and officials from both countries pointed to the progress and advancement of the negotiations. In the coming days, if we witness an increase in tensions, the price of gold could also rise. However, in the absence of such news, as mentioned earlier, short-term factors are more likely to lead us to predict a decline in the price of gold. We are currently analyzing the 1-hour time frame for gold. As we mentioned, after breaking above the $5,090 level, gold showed that its long-term trend is still bullish. However, after that, it entered a short-term downward channel. We can confirm this short-term channel with lower highs and lower lows as a short-term bearish setup. As you can see, a 1-hour candle has formed above its previous highs and closed there. If this candle continues to stay within the shadow area of its previous high, closes and forms a pin bar candle, it would indicate a lack of sufficient strength to continue the upward movement. We can consider this as a Saving Private Ryan strategy and target the FBG levels, and with lower liquidity, you can enter a successful and profitable sell trade.